Hi, this is Optimus Futures, and we're back with our weekly roundup of key futures markets for our viewers. For this week, we'll be analyzing the markets as they closed on the 19th of October, Friday, 2018. And we will, as usual, be starting off with the S&P 500 E-mini futures market. So if you recall our analysis for this market from the prior week, we have been talking about the importance of the bounce just above the 2700 level here, after, of course, a very sharp period of bearish trading activity. We had talked about how the market bouncing off of the 2700 level was to be rather expected and was pretty much on the cards, given the fact that the market, especially this market, has had a very good and documented past of dropping or rising very sharply and then basically going in the opposite direction just as hard. So if we recall back in January, February, we had a similar situation unfold where we had a very sharp escalated move towards the upside, and the market just dropped hard, pretty much with the same momentum or similar momentum, and then we were able to consolidate for a bit and then eventually unfold into a more smoother, longer term consistent uptrend over here. We were once again reminded of that drop in February a couple of weeks ago when the market really dropped very hard, just underneath the 2960 level, and we once again, pretty much like back in February, we had another sharp pullback into the sharp selling activity over here. And so last week that theme pretty much continued. The bounce just above the 2700 level actually saw the market pulling all the way back to the 2800 level. In fact, we had a very strong looking bullish candlestick that was actually able to close above the 2800 level. Unfortunately though, the market really wasn't able to sustain that momentum, and the market actually pushed right back down underneath the 2800 level. So what we're seeing here is a brief period of volatility, which is again very it's pretty much expected of a market like this, because if you go back and look at pretty much all the periods where the market had made a sharp move, we've had periods of volatile consolidatory, if that's a word, periods of trading activity. So if back in February we look at the sharp drop over here, we had a week or two where the market was just volatile and pretty much up and down and consolidating before there was more evidence of directional bias for the market. Again, in March here, when the market dropped very sharply, we had a couple of weeks of sideways trading activity and volatile trading activity before the market had actually unfolded into a more consistent long-term uptrend over here. So we're thinking that we may actually be seeing the same phenomenon unfold here once again, where the market has dropped very sharply and now that it has actually bounced off of a swing low over here just about the 2700 level, it's pretty much in that phase of consolidation and volatile trading activity. So we just expect that to continue for a bit. For us, the major price level that we're watching here is going to be, of course, the 2800 level. So if we just stretch that back across more recent price action, we can see that this is a very important horizontal support and resistance level for price. Of course, multiple indications of the market either finding support or resistance at this level. In fact, just last week, we actually found the market sort of finding resistance around the 2800 levels. The market dropped right back under the 2800 level to close for the week. So we're going to be watching this level very carefully. Of course, down here we have the level just above the 2700 level, where price actually bounced the week prior to last one. So we're looking at these two levels here to basically dictate the current consolidation phase. Again, we're sticking with our previous viewpoint for this market, or long-term viewpoint for this market, where we're expecting this market to basically hit the 3000 big round number, which now seems way far away. Of course, when the market was in a decent uptrend, it looked pretty much in contention, but this sharp move down changed things just a little bit. But just looking at the fact that the US economy just continues to grow strong, there are really no major fundamental catalysts that we believe could actually allow for the market to spring into a consistent long-term downtrend over here. And so really, since all of the indications here just continue to point up north, we're still long-term bullish for this market. And over the mid to long term, we expect for the market to restore upward trading momentum, such as the one that we witnessed like a couple of weeks ago, where the market was nicely uptrending over here. We expect that uptrend to restore at some point. Of course, a lot will depend on the market's ability to push past the 2800 level over here. So we will be watching this level for a possible break towards the upside of the market holding or finding support at the 2800 level and continuing its way up, possibly to test this more recent swing high that the market's made just above the 2900 level before it can try to attempt to basically hit the 3000 big round number, which is what we're looking as a mid to long-term target for this market now. Okay, so the next market we're going to be looking at here is the light crude oil futures market. This was another interesting market to follow last week, as we did see price action unfold exactly as per our expectations. We have, for this market, of course, been talking about the $1.74 major support and resistance level and the false breakout above it. We had the market close above the $1.74 level and then unable to sustain that momentum towards the upside. We saw the sellers then dominate the market as price was pushed underneath the $1.74 level, which then held as resistance and continued for the sellers to gain momentum. Last week, if you recall, we had talked about a potential test of the $1.70 round number, which runs right around here. Well, of course, we not only tested the level, we were also able to close underneath the $1.70 round number here, which basically allows for the market to inch closer and closer towards a very important location for this market. And that to us would be a potential test of this rising support trend line. So if you can, if you look at this this rising support trend line, of course, it's been a very, very important factor in pretty much that level, that the trend line that's been holding the trend up in place. And so a test of this level here should make for a very, very interesting follow-up, where we'd like to see if the market was going to bounce once again like it did here, or we're going to see the market actually push down underneath the level, close strongly, use it as resistance, and continue its way down, possibly in a breakout kind of a situation underneath the support trend line, which would or should allow for sellers to dominate for a little bit longer, and we may then potentially see at least a major extended pullback into this long-term uptrend, or we may even see a full-fledged reversal off of this level. If you recall, for the more longer-term perspective for this market, we've been talking about how we see all of these major pullbacks into the uptrend in the more recent past as possible indications that the market is trying to reverse or post an extended pullback into the uptrend here off of the $1.74, $1.75 long-term support and resistance levels. So we see all of these periods of brief selling activity continuing on here, and all of these threatening extended pullbacks into the uptrend as a potential indication of the market sort of rounding up here. So if we see a break of this of the support trend line over here, that could make for a very interesting potential bearish breakout trading possibility, and a good location for a lot of sellers to be able to jumping in on breakout trades of very dominant and strong looking support trend lines. So going forward into this week, we expect the market to try and test the support trend line, and from there on it'll be interesting to see if the market's going to bounce right back up for yet another push towards the upside and a potential retest of the $1.74 and $1.75 price levels, or we're going to see a push down and more extended bearish trading activity for this market. Okay, so next up we look at the euro currency futures market. This is a market that once again did not post enough exciting trading activity for us to be really jubilant about analyzing this market. Once again, this is a market that's pretty much stuck around the 1.16, 1.1550-ish support and resistance levels. Of course, multiple occasions where the market within this elongated period of consolidation has either found support or resistance off of the level, and for now just continues to consolidate and pretty much oscillate up and down around the 1.16 and the 1.1550-ish price levels, and that continues to be the theme going into last week as well. We did, however, noticeably see a couple of strong selling days the prior week where the market was actually able to close underneath the 1.16 level. But then on Friday, as you can see, we had another pullback as the market once again was attracted towards the 1.16 support and resistance level over here. And once again, our viewpoint for this market remains the same, which is that we would like to see for the market to make a sustained move past the 1.16 level to be able to think that the market may be transitioning away from this more recent consolidation period that we're seeing for this market. So as long as the market just continues to pull right back towards the 1.16 level, we really just expect for this period of sideways trading activity to continue, and for us to not be very excited about analyzing this market, basically. Okay, so the next market we're going to be looking at here is the gold futures market, which seems to be stuck at a very, very interesting location pretty much for the entire last week. As you can see, we really didn't have a lot of vertical price movements for this market in the prior week, as the market spent pretty much all the time just consolidating within a very, very tight range. And if you look closely, it's actually no surprise why the market seems hesitant to go up as well as go down. So following from the breakout of this sort of a wedge pattern that we had developed over here, where the market was consolidating and getting tighter and tighter within this wedge pattern over here, we had a strong looking candlestick that closed strongly above, potentially indicating that there may have been a breakout towards the upside out of this wedge pattern formation. But if you recall, the strong buying that came into the market was actually a knee-jerk reaction following the large sell-off in the U.S. equity sector. And so really last week when we were analyzing this market, we were talking about how it should be interesting to see whether the buyers here will be able to maintain this momentum, and whether this entire move past this wedge pattern over here is a genuine attempt to create a more extended long-term uptrend on this for this market. And we didn't see any developments on that front at all. Part of the reason being that, of course, the market seems to be running very close to this 1250-ish support and resistance level, but it's mainly acted as support in the more recent past. And so no surprises if the market actually tries to test this level and fails to break it towards the upside, especially if all this buying that came in the week prior to last one was really just the knee-jerk reaction that we feared it would be, and there was really no real upside interest for this market to be able to take price up north and past the 1250 former support, potentially turn into resistance level over here. On the flip side, we're also looking at another interesting and crucial, more short to midterm, but again an important support and resistance level running right around here, pretty much just up pretty much at the 1210-ish area. So once again, multiple candlestick lows touching this level in the past, and then in the more recent past we had several occasions where the market actually bounced and found resistance off of this level over here. So we're looking at a very, very tight range for the market to be trading in over here, with the 1250-ish former support, potential resistance area over here, and this former support and resistance level sitting at the 1210-ish area. So within about 30-40 ticks, we have the market obviously just really caught up here, but this also makes for a very, very interesting following week as the market tries to either break past this level or go right back down here to continue sort of more with the longer term downtrend over here. So it should be really interesting to see where the market takes off from here, but just looking at the momentum here or the price action from the prior week, we're unfortunately not in a position to make a call about whether the market is going to be continuing its way up or will continue with the consolidation phase as it just pushes right back down underneath the 1210 level and possibly test the 1200 round number running right around here. Okay, so finally we look at the 10-year Treasury note futures market. Well, this is a market that was disappointingly slow for us last week. We've been talking about the importance of the 118.20-ish former support turned resistance level over here. Of course, we had two very obvious instances of price finding support at the 118.20 level in the more recent past. We had a strong break towards the downside underneath the level, and then we'd been hoping that the market would find resistance at this level and just continue its way down. Well, half of that story did come true last week. Of course, as the market pulled back to this level, it did show us enough evidence that the market was definitely holding as resistance at this level. However, we've not really been able to see that strong push towards the downside, which would confirm this entire break underneath the 118.2 level as a confident and a solid one per se, and which would, of course, validate our assumption that this entire move underneath the 118.2 level here could possibly be an indication that the market wants to return back to strongly downtrending here, and that it was past this entire more recent phase of consolidation that it has been stuck in for a while now. So despite the fact that we really did not see a lot of momentum towards the downside, we do not yet believe that it's a warning sign, and that the market could potentially be indicating here that it wants to consolidate a little bit more. Of course, that may change if the market was able to actually make a move above the 118.2 level, use it as support, and then continue to consolidate and bounce off of these more midterm levels running right around here. So unless we see something like that happen, we're still pretty much sticking with our original viewpoint for this market, which is that we expect for more downward trading activity for this market going into this week, especially now that we see that the market seems to be holding as resistance at the 118.2 level. If this level, of course, ceases to act as resistance and allows for the buyers to continue to take price higher, well, that viewpoint and that perspective may then change going forward. But for now, we really do not have any indications to doubt that belief at all, even though we're not really looking at any solid bearish trading activity just yet.